The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
Exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host.
The following takes place between 2 p.m. and 3 p.m.
And we got a market that's up again today, up 13 points in the S&P cash. So what's the volume coming in here as we start the show? 1.75 billion shares. So again, going up on fairly light volume. And is this a big sign? I don't think so. We've got so much volume that comes in at the end of the day that if it would continue at this level, I think it would be a pretty massive sign. But again, in a bubble, which I'm going to just call what we're in right now a bubble, it doesn't really matter. This is the same kind of beanie baby madness and tulip business that goes on forever. And that is the bigger fool theory. I'm going to buy something, I'm going to sell it to somebody who's even a bigger fool than I am. And the problem is that it is nothing more than musical chairs. Whoever's sitting in the chair when the music stops, or standing when the music stops, eats it. But you know what? If earnings go up, I'll be glad to say I'm wrong. But I don't see anything that changed much of anything in the last 60, 90 days. So I'm going to still say this is the most expensive market since 1880. That we've seen, and generally you're going to get the results that you got in 1880. I know you all remember that day, just like it was yesterday. Well, maybe not. Anyway, I love to hear people say that there's absolutely no way you can be short this market. I would say on the equity side, I could say that maybe I'd agree with them somewhat, not totally. On the option market, I can tell you that they are 100% wrong. It doesn't matter if you lose all your option premium 10 times in a row. If on the 11th time you make 50 times back your money, the one thing you don't want to do is increase risk. Options are for reducing risk. So if I lose, we'll say I lose $6 on a $400 stock, I don't buy any more option contracts than if I was going to lose $4 on a $400 stock and I was shorting the equity. Again, does it make a giant pile of money instantly for you? It doesn't. But when those times come back that you make 800 or 1,000% on your money, it makes up for a world of errors that you can make in the future. My guess, though, is we've got kind of one of those markets right now, and everybody's going to wait for some kind of giant signal. Normally in these bubbles, you don't get them very often. If you're looking for confirmation and waiting for it, there is a technical indicator that is, I just haven't had a use for it in a very long time. But this is exactly the market that you want to start dusting that one off and start reading about it, and that is the parabolic SAR, because we are in a parabolic market. Earnings are not driving this market. It's all about the thought that maybe that tax cuts will come in time to basically take a market that is front-run them. So at worst, nothing, taxes don't happen and the market falls apart. At best, all that money is already in there. The question is the risk reward out there for you? And for me, could the market go a little higher? It always can go a little higher. And could you lose some money shorting? You could. But guess what? There's probably 4 days total in the 18 or 19 years that I've done this, that options were this cheap. And generally, you had pretty good results on them because you don't hardly need anything for these things to come back and balloon because literally everybody is long. Amazon, last fall, no one thought that it could pull back. And what did it do? It pulled back. Was there any big indication? No. For me, the indication was literally everybody was long the stock. No one could short it, and that was it. And that is always the time that you want to be the most scared. If you want to be long, I don't have any problem with that. I would say the same thing. Options are so cheap now that they are significantly cheaper than owning and risk averse compared to owning the equity. And that's not something you can say. One of these things this market has given us is the opportunity to buy options at ridiculously low prices. If this market was to turn down, you'd never be able to get an option again that had the kind of risk reward that you would have today. Also, you're probably going to have pay up the nose, and unless the stock literally falls apart, you probably won't make money when you do. People start buying puts after the barn is burned down, and that's not where the time you have to do it. You have to do it, and you may even have to be wrong a couple of times. And when you get the big one, it's always worth it. Give me a call at 877-927-6648. Email me at path@tfnn.com. And, of course, post messages in the den.
That it's all just a little bit of history repeating.
What else do we have going on out here? Well, we got history. On this day in 1969, an embarrassed breach of the United States air defense capability. A Cuban defector enters the U.S. airspace undetected and lands his Soviet-made MiG-17 at Homestead Air Force Base south of Miami. Presidential aircraft Air Force One was at the base at that time, waiting to return President Nixon to Washington. As I've said before, everybody thinks that they're aliens up there at Groom Lake, otherwise known as Area 51. The reality of that air base is it tested a lot of new airplanes, but it also hosted a bunch of airplanes like this, MiGs and everything else that we tested against, especially during the Vietnam War to get our guys trained as well. And, of course, a lot of that training actually turned around a 5-to-1 loss ratio in MiG Alley down there in Vietnam to a 20-to-1 win ratio in just under a year. And I don't know if it was this airplane, but we had an entire Russian army hanging out up there at Groom Lake where they tested and trained pilots at for a number of years. So every time you see an alien, you also think about maybe this MiG that was sitting up there. I think we eventually put it back in a box and sent it back to Cuba. We get to use these things when they show up from time to time. In a minute, we'll be back. We'll be looking at charts.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we got a lot of, I won't call it fake news from the peanut gallery on Wall Street today. Actually trying to get into real news. So had somebody ask me earlier in the day about FireEye. This thing's going into highs of anywhere from 7 to 12 million shares. Looking at this one at about 3 million shares so far today. So this one's kind of moved fairly well. And made some money if you bought it back 12, 13 bucks. In a bubble market, put in your trailing stop and learn to live with it. That's generally the way to ride these. Okay, so what else do we have? I wanted to look at Netflix, NFLX. As everybody's chimed in here today, they've raised their price. I have to go through all of them, just like school all over again. Raised their subscription price. I haven't had the thing since January. I figure that I can get them about 1 month a year and then watch everything I want to watch, and then don't pay the rest of the year. They have some stuff that comes and goes. The movies, at least the third-party movies that they're not involved in, just haven't been that exciting for me. I've been watching a little bit of Amazon, but to tell you the truth, there's just not that much out there that has appealed to me lately. And Netflix, big deep dive into all the Marvel universe of weird comic book stuff. I was comic booked out 4 or 5 years ago after the first Iron Man. That was about enough for me. Anyway, Netflix back up to its high here today. And of course, what do we have here? Let's go back out here. Let's shorten this down here. Oh, I got it for 2 years. That's why. Okay, so what do we need? We needed about 9 million shares. So far, we got almost 15 million shares. So it's gone above its previous high. Whether it closes above there will be interesting. The debate this morning before the stock really started getting going was whether or not raising the price will cause them to lose handful of subscription. It wasn't so me on the cost, it was just on the content. And the question is, are people willing to pay up for that content? And I don't know. It's going to be interesting. Certainly the stock price says that they like it. In past earnings calls, though, they have grown not to like that, especially when U.S. subscriptions continue to head south. So this one tends to be bullish on this kind of news when it happens, and bearish when you come to earnings. So we'll remember that when the next earnings call comes up for Netflix. Generally, everybody just gives it a free pass and goes on. I'm worried about them not having any true moat out here and getting lost with the wheat and the chaff. Up to this point, it does not matter. Again, we're in a bubble. If you're long this thing, just put in your trailing stop on it and enjoy the madness. Okay, what else do we have going on out here? Okay, EIA was plus 42 billion cubic feet for natural gas. That was a little shy of the 51 cubic feet. And what can you say? Not a big deal out there. At least it's not going to be for a little while. So what else do we have? Take a quick look at here. Let's take a look at AAOI. They needed some kind of juice out here. Didn't seem like it's doing much for them. They borrowed a bunch of cash. Might be making some kind of low. My guess is this thing, the risk reward would be at $50 to buy it, so just a little bit farther down out here. Certainly came off with huge volume back here on this July 27th high. It's been tracking lower. The energy has not been all that exciting off the September 19th low, but I still think that you can see $50 in that one. Microsoft MSFT, been a week of their developer brouhaha, and some pretty good news long term about them being the vendor for developing software on all platforms. And a nice move out here today. What you don't have is the kind of volume you wanted to see. $75.97 on September 18th. You're looking for something like 27 million shares. So far, you got about 12 million shares. So if you were looking for a top in Microsoft, well, I think you're going to get one at least with half the volume of that September 18th high today. And fill the gap? I think you can. The news was pretty good. I just think, again, like Amazon running last November, these things just look very, very tired. And whether it's a day or two from now, I think you probably get a fill of that gap down to 74.80, even though everything they say seems to be working out fairly well. So let's take a look at a few other stocks. XLF, a lot of these things had just come out and started showing some lower or longer term trends. Wanted to see, this thing broke out about 25.21 over the March 2nd high of this year. That day had 70 million shares. So did you ever get that 70 million shares over here on the right-hand side of the chart? You never really did. Today's a pretty good day, 38 million shares. But again, this looks to me not horrible, but could be fairly tired in some of these. Wanted to see how this one done. This was my poster child for fraud stocks in China. This was a company that put out in China 10 times the amount, or in the United States, 10 times the amount of goodwill and everything else on its books that they put on in China. No one ever came to the door. No one ever said a word. No one ever said spit. They also said they had a bunch of locations, and of course they had like 3. Doesn't seem to matter. This one, of course, at least, it matters if you own the thing. My guess is it was always one that was going to be a zero stock eventually. In China, I just wonder if it can happen because, of course, we can't go over there and really wrestle through the books. We play the quote every once in a while from Herman Munster of 1313 Mockingbird Lane. He's actually some widget that's always on CNBC being asked about it. And he had to admit that he never looked at any of the books, never looked at anything, never went to any of their places. And he's an analyst, and it's in China, so he can't. He says, yep, I just can't do it. So I can own the stock. I just have to grin and bear it. But, you know, if there is something going on, this thing is kind of down on light volume compared to the August 28th low. That low had almost 10 million shares. We're dipping below it today on 3.2 million shares. So if there was something going on out here, keep an eye on this one. If we're really going to run and really have the kind of .com blow off top that we did in 2000, or the smackdown that we had in 2008, or 1987. I think we need to look at some of the strongest ones. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
I had a good question without specifically getting into what I'm doing. The question was about what I was doing, and I was buying Novembers, a little out of the money in most of the things that I'm looking at. They were ridiculously cheap for something that can double in price, or actually half in price, depending on which way you look at it. The things are ridiculously priced. They are making bets that there's literally no way that the market could go down. And of course, I'm somebody that was tremendously influenced by Fooled by Randomness by Nassim Taleb, and also incredibly impressed with his $3.5 billion. For a guy that loses on his trades 75% of the time and continues to amount a small fortune, more like baseball than football. You don't have to you have to win 15, 16 games a year in football. In baseball, you get a hit 1 out of every 3 times, $15 million a year. Different kinds of games. But that's why when anybody says that I can't be long here, I can't be short, I always think there's a lot of ways that I've seen people make money that are no way the way that I trade, and they seem to make money. So there are many ways to skin a cat. What else do we have going on out here that we want to take a quick look at? CMG. Again, when a stock comes down on huge energy and volume, I'm not one to jump all over it and think that there's going to be some kind of V bottom in it. But if you are looking for something, and I am not right now, but if you're thinking that the market's going to rotate out of this, you're going to get pulled back, and you're going to look for something to buy, this is exactly what I look for, and that's these low volume retest, test after test after test, and the thing goes sideways for a long time. I'd probably go to a Chipotle, probably check it out a little bit more to find out if this is what I'm looking at. I'd watch the intraday tape. But for a stock that's come off $750 to go sideways here around this $300 level for as long as it has is generally fairly bullish on this one. We've got a lot of just the opposite, and that's at highs. A lot of stocks doing this, and they've just broken out. Some of them on volume, a lot of them not, and that's just something to keep an eye on out here. But if you come down like this one off of 499, and let's actually go here a little longer, off of 758, and you finally find some level where the thing starts going sideways, you kind of want to look at how long the thing's been going that sideways. And in this case, this hit at a high on August 5th, 2015, and just fell out of bed. Of course, this is a bull market, so this can't be right. My charts must be wrong. Stocks only go up. All stocks go to heaven. Anyway, 758 down to 399. This thing's kind of played around, had some more problems out here. But again, this thing's gone sideways for a while. Now, you want to look, so we got, what is that? August 5th, 2015. So now we're into this thing 2 whole years and 2 months. So you got to kind of look at that when you start seeing this thing go sideways. Is it going to be over in a week? Most likely not. Is it going to be over in a month? Maybe not. But if this thing continues to do this and bounce around, or maybe even bounce up a little bit and then come down with incredibly light volume at about $300, let's say 6 weeks from now, just keep an eye on these things. This is where you can, where a little bit of patience and diligent work that most people won't do in the stock market pays off. I can tell you that I have seen many of these develop and got invested in something else and or distracted only to watch these things run. So I kind of put my little notebook together, and I know to go back and look at these once a week. I started seeing this one out here, and I thought it was fairly interesting. So, even in the worst bear markets, some stocks do well, and most of those stocks that do well are the ones that got beat up before the incredibly huge bear market and have already been washed out to the extent they can be. And generally, even if they've done poorly, the new bear market washes even those folks out and leaves some of the best buys that you can ever get in a market. Let's take a look at Win. Yeah, no lines here I didn't see much. They're just opening up a new one not too far from me, and it wasn't open last week, so I bet it's open this week. So I'll probably go by it this weekend and see. You know, it's going to be a new store, so I imagine they're going to have a lot of people in it, especially since there wasn't one around here for a while. Anyway, Wyndham Worldwide, symbol WYN, up here testing a high. That's the August 3rd high, 106.50. Almost 4 million shares today. We're coming up with, 400,000 shares. So there are some jewels among the, and some wheat among the chaff out here in some of these charts. But certainly you don't have a great deal going on. Another one that I thought was kind of interesting, PCLN. This thing, of course, got blown apart on the last earnings call. And when we look at this one, I've always liked to see about half that gap filled. I don't know if you're going to get it in this one since it was blown apart so badly. Ideally, you get 1975 out of this thing, and somewhere between that and 2000. And if you were long this thing, you'd just pray that you got back all that cash. I haven't looked at this too closely, but this is now starting to get back into this repair thing. Let's take a quick look at Expedia. Expedia, isn't it? EXPE. Its brother. Kind of the same kind of pattern, just a whole lot less in the way. Now this one is coming back and doing its little dance on the catwalk. So 149.68 would have been the 50% retracement. Kind of spiked that today and again last week. But actually on Monday, I guess. This 149 is going to be kind of hard to look at. Now, Expedia is a little bit different than Priceline. Priceline is kind of a one-trick pony for what they do. Expedia has gotten real big in the bed and breakfast thing like Airbnb, and that's kind of saved their bacon over the last little bit. But more and more cities are kind of trying to outlaw these Airbnbs. I know that the Airbnb thing, I think in London got squashed. If I remember right, I'll have to look at that. I think that was last weekend. So you kind of have to watch what's happening along the regulatory lines. But if you're looking for some stocks that potentially have some ABC down patterns forming, this is it. I would still, just because this one is such a cult stock too, I'd probably look at Priceline first. But this one, you might look at the 6.8 on this one, which is up 152.36. Move back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
You know, I don't think people remember. We were talking in the den about Chick-fil-A being closed on Sundays. I remember growing up and everything was closed on Sundays. You couldn't get anything. Banks, no ATMs, stores were all closed. But we lived fairly close to the state line, and the stores were actually open on Sunday afternoon. And my mom always loved to drag us over there to buy us clothes. I wish they were closed then. I would have liked to had my Sunday off. But it just very weird. I think had to be the late mid-70s. I think it was almost 1980 in my area before they reversed the blue laws and you could be open on Sunday. But at different times. I know, Grandpa. What else do we have going on out here? Wanted to look at Apple. Got an email asking me if anything's going on here for that. And, you know, you got a little bit of a bounce off this level at 151. Is it anything exciting? No. Volume today is 14 million shares. Does that really do anything for you? Well, you came down on 37 million shares on the 21st of September. You're basically into those candles where this thing actually came down. So we'll see what the volume is on the closeout here. But so far, nothing too exciting. When you look at the Avago, again, I don't see anything out here that shows a lot of volume coming into this into these stocks. So it's been a lot of rotation, and these things have fallen off. We'll take a look at NVIDIA today too. It's just not anything, not like these things are falling off the surface of the earth, but they certainly aren't participating. Avago up a little bit. It's kind of the same thing. You're up on 1.7 million shares compared to 5.7 million shares down on the 20th. So again, these things are kind of coming back up into what should be fairly stiff resistance levels. And you could make a case that Avago may be at its C point out here for an ABC down. What else do we want to look at? Okay, I wanted to look at NVIDIA. NVDA. Of course, this one gapped down on the 21st of September, did so on 26.8 million shares. Today, we're kind of pushing that with 8.5 so far. Again, I know a lot of this volume comes in very end of the day, so take a look at it. But certainly coming back to this gap today, kind of rolling back off of it. We did that on the second two. Yesterday, kind of hitting those areas, but there's not a lot of juice. And if you really wanted to say the trend of the last 5 days has been volume decreasing, it hadn't been increasing as it's built up against this level up here. Take a quick look at Facebook. Fakebook came down heavy. Energy did come back up again. Not a lot of push to drive this thing back up to the 174 high from September 12th. Came down with 41.2 million shares. I heard 3 or 4 articles all saying how they would be in front of Congress. Now I can't find a single thing. No retractions, no nothing. So I have no idea what's happening with them and Congress. I haven't turned the TV on yet today. So if there's anything going on and I didn't read about it, I don't know about it. But what are we up? 10.2 million shares. You were down on 14 million shares on the 2nd. And of course, you came down on that 25th with 41 million shares. So just these things in the past have always found a lot of buyers and volume coming back in after they've blown out. These really do look like they're in for some kind of at least consolidation. And that they have, we've been 5 days out here, and people haven't decided to light themselves on flames to get back in it. It hadn't been bad, but I'm thinking maybe there is some level of consolidation that has to happen in these older high flyers to take a look at them. See what's going on with Morgan Stanley. This one tested its previous high, didn't do much the last couple of days. August 8th, $48.90, a little over, well, let's call it 9.5 million shares. Last 3 days, 6.5 million shares yesterday, 5.3 million shares today, 7.6 million shares. Could we get to it? We could. Are we going to close over above that? Yeah, I think there's a possibility of doing that. Energy's about the same on the way up, on the way down. So there's not a huge bias in that one way or the other. And when you're looking at the XLF, that's what I'm also thinking. Well, you went over this thing. Did you really have a huge sign of strength when you broke the highs? No. Was it bad? No. Today we're going to have, we got 40.6 million shares already. So you're going to get 72, some kind of big sign? Don't think so. So could these things hang up here? They could. Is this the kind of breakout that you really like that you saw in the small caps? The answer is no. And so far the energy's just about the same up on this leg as it was on the last down leg. So horrible? No. Tide generally go to the runner in these things. If volume's the same, yes, you can see higher. But I don't see, something that is just making me think that this is up and away in our beautiful balloon. Okay, so it's on November 1st now. Yeah, I kept on saying it was this Wednesday, and then nothing. So must have been more fake news from Facebook. Okay, but November 1st now. Okay. What else I wanted to look at out here? 5N, 5.9. This is a retail stock, if I'm not mistaken. Let's go ahead and look at this. But I'm pretty sure this is like a ladies' clothes store, kind of a high-end dressy dress. Nope. Software cloud services. 5.9, together with its subsidiaries. Cloud service for contact centers in the United States offers virtual contact center cloud platform, delivers suite of applications, blah, 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 blah. Clients to manage these customer interactions across various channels, including voice chat and web and email. Okay. So call centers in San Francisco Bay. I was watching this one as it went above the previous high of June 5th. That's 2480 with 650,000 shares. You kind of had the same volume as you approached it yesterday, 375,000 shares. Today, 340,000 shares. So, you broke out with some volume back on May 4th. This thing kind of consolidated, did its job. It just really hasn't given you a sign of strength, though, again, above the 2480. Is it horrible? No. But my guess is this thing probably closes back below that 24.80 in the next day or two. Well, we're getting ready to go to the break here. Last chance to give us a call at 877-927-6648. Email me at path@tfnn.com. And, of course, post a message in the den.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Hi, folks, this is Tom O'Brien. Come join me next hour as we bisect and dissect these markets. Right here on TFNN. Wow!
And somebody wants The Rock to run for president. And all I can think of is all the unresolved issues in all the previous 10 Fast and Furiouses that we would miss out on if he ran for president. But he actually, I saw that this morning, confirmed 2020 for the next Fast and Furious because, of course, so many unresolved issues from all the other 9 Fast and Furiouses before. I think I nodded off in Fast and Furious 3 and haven't seen anything else. But you never know. What do we got going on here? Well, wanted to look at this last one as we wrap up the day here today and watch what's happening. 2550 on the S&P cash. Has volume really picked up or so? Well, we're going to hit probably 3 o'clock before we even hit 2 billion shares on the NYSE consolidated tape. So it's going to be even a lighter volume day than yesterday. unless something really comes in. Again, we get somewhere around the neighborhood of about 300 million shares in the last few minutes every day now. But that, if anything less than about 3 billion today is probably going to be fairly indicative of a very light volume push higher. One of the things I've been looking at is, of course, retail sector has been the worst of all of them. The Spiders Retail ETF, the XRT, has come back up to the August 8th high, $41.73. That had 7 million shares. You got to it with 7.9 million shares on the 27th, and it's done nothing but go sideways since. Today, a little push higher with about 2 million shares. The one thing I really dislike about this is that it had a lot of energy off that August 8th high in rather light volume markets down to the August 21st low. And then if you look at this August 21st low up to this 41.99 high on September 27th, the energy, all except that day when it tested the previous high, had been very, very minor. So getting kind of two tails out here and it going just sideways as we hit these previous highs. Keep an eye on the XRT. In the meantime, sell when you can, not when you have to. And we'll see you here tomorrow. Same bad channel, same bad.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.